Please keep typing your questions. Before we get started, I want to teach you all how to get a raise or a promotion. Okay, a lot of the times we look around and we notice that people get promoted or raises much faster than I. Here's why. They ask. So how do you ask? Well, here's exactly what you do. When your boss congratulates you on a job well done or compliments you, immediately, I want you to say this. Please let me know if you have time for just a quick coffee or a quick tea. They're going to be in a good mood. Then what you're going to do is you're going to get a notebook and a piece of paper. And you're going to say the following, okay, if true. I love what we've done as a team. We've accomplished a lot. And I'm really bullish on the long-term prospects of our company, our team, etc. That being said, I want to ask you humbly, please let me know what I need to accomplish, meaning what additional value I need to add to our team in order to get considered for a raise or a promotion, because as you know, it's very expensive to raise a family in this area. Okay. And they're going to give you a lot of feedback, and you're going to write down everything they say, obviously. Then you thank them for their time. 3 or 6 months down the road, when they congratulate you again on a job well done, I want you to do what I just mentioned. Say, please let me know if you have time for a quick coffee or a quick tea. Okay. You're going to sit down with them, and you're going to start with the whole spiel if true. I love what we've accomplished as a team, and I'm really optimistic about the future. Now, 3 months ago, we sat down, and I asked you for some feedback because I want to provide the best standard of living I can for my family. And you had mentioned that I need to achieve the following 5 things, for example, in order to be considered for a raise or a promotion. Well, I'm very humbled to say that I've accomplished all 5, and I'd like to please ask you for a raise or a promotion. Okay? This works. Okay? But remember, closed mouths don't get fed. And everybody around you that is getting promoted or raises faster than you, they do this behind closed doors. You just don't see it. Ask and you'll receive. It's prophetic. It's been true since beginning of time. Okay, let me move on to questions now. All right, so first up, I've got here Naveed. Hey, Naveed. Wrote, hey, Chris, I bought your Silver MBA program. Thanks for your kind Black Friday sale. Can you please guide me how to take this course? Absolutely. And for anybody interested in taking the program, just email support@harounventures.com and I'll send you a link because we don't advertise the link anymore. I'll go through this very quickly. Okay. So what you're going to do is you're going to go right to the curriculum and take it in order. Okay, now the very first section here, you'll see that there's orientation. I want you to go through that and it'll tell you exactly how to take the 400-hour program, okay? Now, you've got to watch this lesson here. This one's crucial, okay? And I'm going to explain how you can all get value out of this. You don't have to buy my stuff. But in this lecture, the first personal growth lecture here, I provide you with this. And I'm going to give this to all of you, a slimmed down version of this in a second for free. Let me get back to Big Chris mode. I'll use this camera angle here. Okay, this is hard to see, but this is a daily scheduling system. And I learned this from Tony Robbins, as well as from Elon Musk. And if you want to get something done, you give it to a busy person. What does this even mean? Well, what I want you all to do is this. Every night before you go to bed, I want you to make tomorrow's schedule tonight. And at the top, what I want you to do is include all of your goals with deadline dates, okay? And you always have set deadline dates for your goals because, as Elon Musk said, if you set a deadline date of 3 years, you'll get it done in 3 years. But if you set a deadline date of 3 months, you'll get it done in 3 months. Then you're going to schedule everything you're going to do tomorrow down here, okay? And Tony Robbins, and he's the reason I do what I do. I introduced him to one of my portfolio companies in venture capital 10 years ago, and he convinced me to do this. But Tony Robbins said that if you want to get something done, give it to a busy person. And we've all noticed how very successful people around us are in great shape, they have good careers, they're happy, etc., because they stay busy. Now, Tony also said that 95% of people or so give up their New Year's resolutions by the third week of January. And the reason they do is because they don't set a deadline date. So this is daily deadline date setting. Then after you complete this daily schedule, and you can do it by hand, you don't have to download mine. Before you make the next day's schedule, I want you to score yourself. Okay, and so what you're going to do is you're going to take 10% off for each violation. It's very subjective. For example, if you didn't eat the right foods, take off 10%. If you didn't pray, if that's important to you, take off 10%. If you didn't make a certain meeting, take off 10%. Rinse, lather, repeat. And the daily score you get out of 100% that you put in the bottom right-hand corner, it doesn't really matter. All that matters is that you improve each day. Now, I'll show you how to download a free version of this. It's a smaller version you can use PowerPoint for if you want to. So we're going to go here to harouneducation.com, and I'll put this in the chat as well, and type schedule. Okay. All right. Copy. I'll put it there in the chat for you guys. Okay. And what you can do is you can download a PowerPoint version of this. It's very simplistic. And then what you're going to do is you're going to update this daily. Sorry, it's on the other screen here. Let me bring it over here. Okay. Here we go. Great. And you can update it if you want, just print it out daily. This is kind of an old one I used years ago. But update it daily, and then in the bottom right-hand corner, you can give yourself a score. If you guys have any questions on that, let me know. But I'll move on now to the next question. Give me a second. Okie dokie. Here we go. Good. And I'm interviewing a professional journalist later on during this call, one of my clients as well. Really, really good guy named Paul. All right. And I'll probably do that in about an hour from now. Okay. Next question is, you previously mentioned about investing in NFTs. Sure. Can you please guide how to select good ones, reason to select them, and platforms to use? I've never heard about NFTs. Yeah, absolutely. So the best way to think about NFTs is to think about baseball cards or art, okay? And they're just digital versions of this. And so if you ever see a painting and it's a print, in the bottom right-hand corner it says number 7 out of 342. Right? That's a limited print. And whenever you invest in any asset class, stocks, bonds, commodities, real estate, etc., and baseball cards or NFTs, you always want supply to be limited. Okay? You don't want to get diluted. And so right here, this is the Honus Wagner T206. It's a replica, right? And this would be worth, I don't know, 5 to 10 million bucks if it were real. This here is a real Shohei Ohtani card. Okay. Now, the reason I collect baseball cards, I might have the biggest collection of Toronto Blue Jays PSA 10s on the planet. I'm a nerd, I know. But the reason I do is because there is limited supply. So how do you invest in NFTs then, meaning digital versions of this? Well, what you can do is you can go to the following website. Okay. So you can go to OpenSea.io. Right here. And you'll see this image here in the background is the T206. You can kind of see a little bit of it right here. And you can buy cards here as well. Now, make sure that they're issued by a reputable company like Topps. Okay, so this here is a Willie Mays card. You could buy it now for this price here. Do your own research first. So I really believe in sports cards with NFTs as issued by Topps, which is a reputable company. Now, in order to buy NFTs, what you can do, you can go to Topps website and use US dollars if you want, or you can use cryptos. And the crypto that's used most often is called wax, okay, like wax packs. I'm dating myself. I used to buy cards in wax packs. And right here, you'll see wax.atomichub.io. And you can buy NFTs here if you want to. Now, if you want to learn more about NFTs, I did a very long vlog on this several years ago. Just search my YouTube channel. Thank you. And most NFTs are done on the Ethereum platform. Okay. Where most ICOs are done as well. Kind of like IPOs, but for cryptos. Okay. Next question is, what is your view on why crypto markets did not show any movements even after yesterday's interest rate cuts? what is in play in the markets? Why is JP Morgan biased against MicroStrategy? A lot of questions there. Absolutely, yeah. So whenever the government cuts interest rates and the market doesn't move very much, it's because it's already priced in. Everybody was expecting Powell to cut by 25 basis points, right? That's the third rate cut this year. And he kind of implied they're going to cut maybe one more time by 25 basis points next year. Okay, but that was already priced in. Now, in terms of cryptocurrencies, when it comes to interest rates and JP Morgan specifically. So JP Morgan makes a lot of money off of crypto exchanges. However, Jamie Dimon, who is probably the best finance CEO on the planet, who's going to retire soon, he has publicly said many times that he doesn't believe in Bitcoin. And the reason he doesn't is because he said, how do we know that the maximum supply of Bitcoin is going to be 21 million Bitcoin by the year 2140? The current supply is 20 million. How do we know? Well, we don't really know. And as a result, I have been saying since day one that if you're going to invest in cryptos, I don't want more than 5% of your liquid net worth in cryptocurrencies. So why am I bullish on Bitcoin? And I'll go through this very quickly because I've talked about this before. So every single year, this is the worst investment you can make. Cash is trash, right? So about 5 years ago during COVID, there was $90 trillion worth of M2, meaning cash for all major markets in the world, $90 trillion. Well, that amount has increased to $96 trillion today. And I believe that over the next 20 years, this here will increase by about 5% per year. So that means that in 20 years, the total money supply will be $250 trillion. Now, right now, cryptocurrencies comprises 3.5% of the $96 trillion, okay? I think that in 20 years, Bitcoin will comprise 10% of the global money supply. And that implies a market cap target price, based on my estimates, do your own research, a market cap target price of Bitcoin in 20 years of $25 trillion. Which is like a 10-bagger at least. And so my 20-year target price on Bitcoin is at least $1 million per Bitcoin. I don't know the path, but I know the destination. And the best way to think of Bitcoin is it's like digital gold, okay? And the Chinese government, and this is all publicly disclosed, the Chinese government has been selling U.S. treasuries. So if the lowest risk investment in the world is US dollars, and if China, which is a force to be reckoned with, right? If China is buying less US dollars, what are they buying more of? Well, they're probably buying more of gold. This is a great long-term investment as well. This is fake. And digital gold is Bitcoin, in my humble opinion. Yeah. What are your thoughts? If you guys have bullish or bearish thoughts on Bitcoin, please share with us. Thank you. Okay, next question is, I've heard that institutional investors are selling in regular markets to dampening prices while buying them in OTC at lower prices. Is this true? How do you check this online? Yeah, I don't really think so, unless you're talking about dark pools. And dark pools means two big institutions kind of trading with each other and not really disclosing it. The reason I don't think it's true what you're saying, and I say it with love my heart, is because OTC, meaning over the counter, are really illiquid stocks. Okay, and big institutional investors don't like to invest in illiquid stocks because illiquid stocks own you in a down market rather than vice versa. Now, the way to check to see what companies own is you can go to sec.gov and then type in the mutual fund or hedge fund. And then you'll see a Form 13F. Now, a Form 13F is mandated by law that every institutional investor that manages over $100 million has to disclose that every 3 months what they own. And people get really excited when they see what what investors own or they're buying more of. So, for example, the big news a couple weeks ago in the equity markets was Warren Buffett's Berkshire Hathaway started a position in Google. That's a big deal. That's really, really bullish for Google longer term as an investment. Do your research, please. Because Warren Buffett is a value investor and he's signaling to the marketplace that there's tremendous value in Google. Yeah. And you can only find out about that by looking at the 13 Fs. And so I think, it's just my opinion, that in the next 3 months, when Buffett files his next 13F for Berkshire Hathaway, the number of shares he owns in Google will probably go up a lot. Okay. All right, next question is, instead of investing in the S&P 500, can't we make kind of our own ETF by investing only in those, let's say, 50 of the 500 stocks, the S&P, for example, exclude the slow growers? After all, the S&P will bring 15% upside. This selection should bring more, or directly buy VUG or qualified ETFs. Yeah, couple questions there. Yeah. So I don't recommend creating your own ETFs. Okay, it's just too much work. Yeah. The good thing about ETFs is that you pay less taxes if you invest in ETFs rather than creating them yourself. And here's why. So if you buy ticker VOO, which I own, do your own research, please. That's managed by Vanguard, and it represents the 500 stocks in the S&P 500. It's an index fund. Okay. And because the S&P doesn't change that much each year, Vanguard doesn't buy or sell many new shares. Okay. As a result, you pay less taxes on that because the government, and most governments, will reward you for being a patient long-term investor to the extent that if you buy and sell something and realize profit less than a year, you pay more capital gains taxes. If you own it for more than a year, you pay less capital gains taxes. I hope that makes sense. Yeah. Now, in terms of your question on ticker VUG versus VOO, I don't recommend it. And the reason is because if you look at ticker VUG, you'll see that more than 50% of that is tech stocks. Okay, versus the VOO, where I think it's about 37%. Okay, which is still a bit too high, but you're really you're putting too much emphasis on technology there. I'll show you very quickly here how to check this. Okay, so let's go here to Yahoo Finance. Okay. And then what I'll do is I'll type in your ticker and then I'll type up VOO. Okay. So first of all, your ticker is VUG. Okay. So this one here, you'll see if we go to holdings, you'll see the largest holding is NVIDIA. And you'll see that you've got over 50% in tech stocks. You see right here? Okay. Now, if we go to ticker VOO, which I own, which has insanely low fees. Okay. And I always put my money here. I'm not sure where to put my capital. I don't care how it does in the next year. I know that in the long run, this will be up a lot. And if we go down here to holdings, you'll see it's very technology based as well, 37%. Okay, and NVIDIA, of course, is larger here as a percent of assets. And if you have follow-up questions, please let me know. If you want to do research on ETFs, you can always go to etfdb.com. That's etfdatabase.com. Thanks. Okay, next question is upside and CAGR the same thing? Not really. So upside means where do you see the target price of a stock going in, say, 5 years? CAGR is the average annual increase. So for example, if I like to invest in what I believe are 5x5s, meaning a stock with 500% return in 5 years. I'm not always right, though, of course. So that means 500% upside. But if you look at the average rate for that, the compound annual growth rate, CAGR, that means about 43% upside per year over 5 years. Yeah. Okay. All right, in the next 5 years, gold versus Bitcoin versus the S&P 500, which you think will be on top of the rest? I don't know, but I think that 20 years from now, Bitcoin will be at least a 10-bagger. 20 years is my target, but 10 years, I think we can easily get there. Yeah. For the S&P 500, I think it's 15% CAGR over the next 10 years. Okay. In terms of gold, I see a little bit less upside, but I'm bullish on gold as well. Now, regardless of what asset class you buy, I don't want more than 5% in any one commodity or one crypto, et cetera. Okay. And if you want to do investment research on cryptos, because when you invest in cryptocurrencies, they're not really regulated by the government. There's no S1 filing. So what you can do if you want is you can kind of create your own S1. It's not perfect. By using my methodology here, you can do investment research on any crypto you want to. And if you're interested in becoming a client of mine, you can just see the link in the description of this video. Okay, let me move on now to the next question. You get all my templates if you sign up. Okay, next question is, so you prefer not to sell in a bubble because it can take so long to burst that it will be better at the end to wait than to exit early. Yeah. I don't know the path, but I know the destination, humbly. On the stocks and investment class, I do a lot of research on. And I learned working for a very wise man years ago named Art Sandberg. He was a billionaire, God bless him, he passed away. I worked for him at a hedge fund called Pequot. He said never to stand in the way of insanity, because markets peak, markets trough, you just can't time it. And I think it was Sir John Templeton who said many years ago that the markets can stay can stay irrational longer than I can stay solvent, something like that. Yeah. So I don't know the path, but I know the destination. And for many of us, we buy stocks and we panic because it goes down a little bit. It doesn't make sense, right? I mean, Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. So when I buy a stock, and we've all fallen into this trap, when I buy a stock, I don't give a damn what the path is. I care about the destination longer term. Now, historically, we've all made the cardinal sin of selling something because it went down. But if you look at the historical chart, it's much higher now. In fact, if you bought stocks at the peak, or real estate at the peak of previous bubbles, the very peak, you're still up today, including real estate in 2007, 2008. Same thing with stocks, of course. Yeah. Next question is, how do you teach your kids to be kind? Yeah, well, I tell them, take after their mother. Yeah. I don't know. It's a Judeo-Christian ethic of just following those 10 rules we all live our lives by. Yeah. And what I did actually with Andrew and all my kids, I made them read every day in the summer. Okay. And if they read when they first wake up, it's only 30 minutes a day. If they read after 30 minutes, it's like an hour a day or something, right? I did it when they were younger. And I let them read whatever they want. And so Andrew, who was born in New York City, he's a Yankees fan. Okay. He loves Derek Jeter, which is cool. And so he read a book by Derek Jeter called The Goal. This is a wonderful book for kids to read. And the reason Derek Jeter, who's a Hall of Fame baseball player, is so successful in all aspects of his life is because of goal setting. And in the book, The Goal, his parents made him do this. From the age of 9 years old and onwards, he had to write down his 10 goals for each year and put it on his wall. Okay. You know, little things like get A's or B's in school, clean up your room, be good to God, of course, etc. And my son Andrew actually still does that. He has it on his wall, right? And he's humbly very successful because of that. Again, he takes after his mother. So Andrew actually is just graduating from Berkeley. He's got a job in investment banking at a tier 1 firm. I think because he wrote down his goals on the wall. Set your goals, put it on the wall, please. Yeah. And that comes back to what I was mentioning at the beginning of today's call, which is setting a daily schedule. Write your goals at the top with deadline dates. Okay. All right. Next question is, why does Warren Buffett invest in stocks that bring less return than the S&P 500, like Coca-Cola? Yeah. So over the long run, Warren Buffett has, I think, outperformed the S&P 500. Okay. And he's a very long-term investor. So when he buys stocks like Coca-Cola, for example, which he's owned since 1990, he still owns today. He always assumes and says, I believe the market's going to be closed for 10 years and I can't sell it. So he's a long-term investor. Okay. Now, Warren Buffett historically did not invest as much in tech stocks because he was not a growth investor. Of course, now he invests more in tech stocks that are value investments, like Apple and more recently Google, as I mentioned earlier. Yeah. But he's very long-term focused. Yeah. And I remember when he taught one of my classes when I went to Columbia. I was doing my MBA there, and he guest lectured back in December of 1999. And one of my buddies in the class started pitching a tech stock to him. And he interrupted after 90 seconds or so into the pitch, something like that. And he said very nicely, son, I'm going to stop you right there because I don't know where this technology company is going to be product cycle wise in 1.5 years. I can't forecast that. And because I don't understand it, I won't invest. Yeah. And we all thought he was cray-cray at the time. But he was brilliant because 4 months later, in March of 2000, the NASDAQ peaked. Yeah. Invest in what you understand. And Peter Lynch, who is the portfolio manager of the Magellan Fund at Fidelity, he used to always say, only invest in what you understand. And so he would only invest in companies where he and his wife tried and used the product. I believe in that too. And when I used to work, I remember I worked at a big hedge fund called Citadel many years ago. My boss would always say to me, Chris, if you can't explain it, you don't understand it. Meaning don't invest. Yeah. Will stable coins become mainstream and why? Yeah. Yeah, I think so. I think so. And so for those of you not familiar with stablecoins, they kind of, they represent a currency, like the US dollar, for example. And so I think it's only a matter of time until the US government actually starts issuing stablecoins, right? And they've actually done a lot of research on this. You can go to treasury.gov and search for central bank digital currency, CBDC. Congress has got to approve it. It's coming soon. Do you follow IPOs or do you wait 1 to 2 years after the IPO before analyzing companies? No, I certainly follow them. And what I do is step one, I read the S1 document. You go to sec.gov to get it. This is Facebook. So my venture capital fund, I own Facebook and Palantir pre-IPO. But I also invested in Facebook post-IPO. Now, before you invest in an IPO, you go to sec.gov and you download the S1 documents, okay? And I think it's a great opportunity for you to get in early, meaning post an IPO, because a lot of institutional investors have not done research on it. Yeah, so I do that, but I forecast and I model the company 5 to 10 years out, and I always value the company based on my earnings estimates in 5 or 10 years. In my paid for programs, you can go to the link in the description to learn more. We do a big case study on Facebook as well. Growth tech, cybersecurity, and SaaS are all considered one sector, right? No. So growth, there's growth and value stocks. Growth means stocks that are growing really quickly, that are expensive today. Warren Buffett doesn't buy them usually. Okay. Value stocks are stocks that are not growing very fast anymore. And so value investors like Warren Buffett might want to buy. Yeah. I hope that explains that. For those of you not familiar with SaaS, that means software as a service. Yeah. How high insider ownership is too much? Yeah, I would say above 50%. And the reason I say that is there's a chance that if insiders own more than 50%, they can have voting control in the company. So above 50 is way too much. But if we look at Mark Zuckerberg, for example, this is an interesting case study here. So post the IPO of Facebook in 2012, Zuckerberg owned about 28% of the shares. But you have to read the fine print because he had actually 57% voting control of the company as well. Yeah. Do you ever worry about dilution through stock compensation? Not usually. If a company issues about 1% new shares per year to entice employees to stay and have golden handcuffs, that's healthy, okay? 1% max. If you get to 2, 3, 4% or higher, then dilution is an issue, but you got to model it in your financial model, okay? So net income divided by earnings per share, or net income divided number of shares is earnings per share, which is what you use to calculate PE. So I think 1% per year can be healthy. And stock options is a beautiful thing because the way it works is this. When you work at a company, say a tech company, and they give you shares, it costs them nothing to do it. It's a non-cash expense. And what happens is when you're given shares, you usually can't cash them in every year. You have to wait 4 years to cash in the shares you're given. So if you think about it, if I leave next year, I'm losing 3 years worth of options that vest me. I can cash in 3 years. And every year you're given them, 4 years out. And those are golden handcuffs that keep you tied to the company. Because what is a company? It's its employees. Yeah. What are the books that you have created using your book template? It doesn't seem like the ones you mentioned follow them except for one. Yeah. So I've written a lot of books that actually use that template format, meaning 6 inches by 9 inches. And you can download this one for free if you want. Just go to my website. But let me give you all the template for free. And I'll paste this in the chat for you as well. I don't ask for your email or nothing. All right, so I'm going to go here to harounmba.com/write-book. And I want you all to write a book, and tons of my students have done this. And what happens is if you write a book, you bring it to your interviews, informational meetings, customers, etc. Who does that? Do you think that's too much work? I say this with love in my heart. How badly do you want that job, that customer, etc.? So this here is my book templates, okay? And so I wrote this one here with this template, and all you got to do is download it and just write it, and then right-click on the table of contents and repaginate. And there's one page of instructions right here. How to publish on Amazon Kindle, Kindle Direct Press, Amazon CreateSpace, that's paper-based, and Audible, that's ACX. So let me put this in the chat for you guys. There you go. Yeah. And what I recommend doing, I hate when it does that. Give me a second. Sorry. Hold on a second. I have to update my operating system, I think. Here we go. Good. All right. So what I recommend that you all do is this. You repurpose content like Gary Vaynerchuk talks about. So what that means is this. You're going to write one article a week on LinkedIn. Then you're going to repurpose all that stuff into a book. And you're going to take each article that you publish and you're going to turn it into a vlog. You know, Instagram, YouTube, TikTok, whatever. Then you're going to take each article that you wrote and turn it into a course, which is what I've done. Then you're going to take all your courses and repurpose it into programs like my MBA program and other programs. So the name of the game here is repurposing content. Work smarter and not harder. All right. How does an individual investor leverage AI to help with research? Yeah, there's a number of ways you can do it. And I have a lot of courses on that as well. Let me show you. All right. So my customers get access to all my courses, including ChatGPT for investing in stocks, as well as forensic financial statement analysis using AI. And I provide you always with all the spreadsheets you need. So what you do is you enter in the ticker and the name of the company. Then you select your prompt level. I'm sorry, I'm covering this in the corner. Then you answer tons of questions, and I teach you all this stuff as well, using tons of prompts, thousands of sentences of prompts. Then you export it into a one-page executive summary. Bring this to your informational meetings if you want to. And you can also export a 24-page write-up as well. Now, when you guys use AI to help you with investment research, please be really careful because as we know, AI hallucinates a lot. You always have to check the sources. And so whenever you put in a prompt in AI and you're doing investment research, always ask ChatGPT or whatever product you're using for the sources. Yeah. AI is often confidently wrong. What would you say is the realistic return for your 100-step research process plus good portfolio management? Yeah. So my process is I go through all 100 steps right here, and I've talked about this before on this call. So if you do your own research on stocks, okay, and the way you know you have a good stock idea, kind of like the way you know you have a good business model or business plan, is if you finish the write-up, or if you finish the business plan, usually. And so for me, I like to invest in what are called 5x5s, meaning stocks I humbly believe, based on my thorough research, have a 500% upside within 5 years. Quite often I'm wrong, but if I'm right, I usually do okay. And so a 500% upside in 5 years is a compound annual growth rate or an annual return of, I think, about 43% or so. So if you do it right, you can massively outperform the S&P 500 based on your research, okay? Don't ever listen to anybody, including me, in terms of what stocks to buy. Don't listen to people on television because they sound confident, so you think they're right. Always do your own research because nobody is smarter than you, okay? And you'll find that if you do your own investment research, your portfolio, like with professional money managers, your return, your portfolio on an annual basis will probably come down to a handful of stocks, and everything else is noise. Yeah. For Indian stocks, do you invest in NSE or BSE, or are you opportunistic? Yeah. So NSE is the National Stock Exchange. BSE is Bollywood Stock Exchange. I usually do NSE only because most of the liquidity is there. 85% liquidity is NSE based. But I'm usually more of a bottoms up guy. Yeah. Okay. Do you have any AI modules in the Silver MBA program? I do. I have many more though in my comprehensive program, and I'll show you very quickly here, and then I'll move on. Okay, so I've got a lot of AI courses actually. So I've got one on how to invest using AI, the complete artificial intelligence and ChatGPT course, which I co-teach with Luca Anderson, who according to Google developers is one of the top 100 machine learning minds on the planet. Machine learning, we know, is a subset of AI. There's a bunch of courses in here as well. Now, in your Silver curriculum, what you can do is go to the very last section of your curriculum to download one of those courses. Yeah. Okay. Next question is, how do you shortlist which growth stocks to research? What exactly are your initial screener inputs for narrowing the list of stocks after deciding on a sector? Yeah, so I usually start top down. So I pick a sector I think is going to outperform in the long run. And I always ask myself this question before investing in a sector or a stock. In 5 years, will this company and the sector it's in be more relevant or less relevant than it is today? And I do that so I don't get seduced into buying value traps, meaning stocks that are cheap for a reason. Then what I do is I look at growth metrics. I usually want to see double-digit top-line growth for the next 5 years if I can find them. I want to look for expanding operating margins as well. Yeah. Okay. Can you give pointers on my screener inputs, please? Sure. The screener inputs are as follows. A PE of less than 20. And yeah, so I'll go through each one really quickly. PE less than 20, only based on your estimates in 5 years. Okay, so I want your target price to be a PE of at least 20 in 5 years. Okay, and I can talk about how I get there if you want me to. Don't look at this year's earnings or last year's or next year's. Always do your own research, please. Debt to equity of less than 1, absolutely. And for those of you that are confused by the metric or any metric in finance, the best way to think about any formula is as follows. The denominator is always the number 1. So debt to equity of under 1 means for every $1 in equity on the denominator, how many pennies of debt? So if debt to equity is 5%, which is a pretty healthy number, that means for every $1 in equity on the denominator, meaning ownership, there's only 5 pennies of debt. And the same thing with PE. So if you see the PE ratio of a stock is 20, that means for every $1 in earnings per share, investors are paying 20 times that $1. Return on equity of greater than 15%. Yeah, that means for every $1 the company is making, they're making over 15 pennies, sure. And you can look at the DuPont model and disaggregate that as well. I can go into more details now if you want me to. And return on invested capital of greater than 15, yeah, for CapEx intensive companies. Return on capital employed and other stuff. Sales growth greater than 15%, yes. I like that. I like double-digit top-line growth. And lastly, interest coverage of greater than 5. Yeah, you want an interest ratio, coverage ratio to be very, very high if you can. And what that means is how many times can the company pay its annual interest? Obviously, higher is better. You don't want them to default. And then you wrote market capitalization of greater than 1,000. I think you mean more than a billion, I guess. I don't really care about market cap. I care about liquidity. And you never want to invest in a company if you want to own more than 10% of the average daily trading volume. And the reason I say that is because you only want to invest in very liquid stocks so that you can sell without dragging it down if need be. Okay, Manas, how are you? Manas wrote, I'm 23 today and I feel like a dinosaur grandpa. Any tips? Oh, dude, it's age is all in your mind. And so it's interesting because the average life expectancy today is actually 26 years longer than it was in the 1950s. So you haven't even been born yet, brother. Yeah. Oh, to be 23 again. Okay. Is your son doing investment banking after graduating from Berkeley? Yes. Yes. It's not going to be easy. Yeah. And my son, Matthew, it's so funny. So he's doing private wealth management. When he was younger, he said to me, Dad, I don't understand. You want me to work really, really hard so that later in my life I can work even harder. I don't understand. And to that, I would say something along the lines of, well, I want you to enjoy what you do. Yeah. Because the most pathetic life to live is to think to yourself, I want to work my tail off so that I can retire. So you're basically saying, I want to work hard, not be happy, so I can enjoy the last 5 years or 10 years of your life. Rubbish. Enjoy today. And there's a great book I want you all to read by the Dalai Lama called The Art of Happiness. And one thing he said that's really interesting is he said the problem with Western society is we sacrifice our health our entire lives in order to make money. Then at the end of our lives, we sacrifice all of our money to maintain our health. And then we look back and we realize we never really lived to begin with. So I want you to all be happy today. And here's an interesting formula for you all to think about. Okay. The numerator is haves. The denominator is wants. I want your haves to be greater than your wants. Focus on what you have and you'll always be happier. Yeah. There's no such thing as retail therapy unless it's GTA 6. And when GTA 6 comes out, it looks like it's November of 2026. You all know I'm not doing this webcast for at least a month, okay? Yeah. All right. All right, next up. How will ChatGPT make $1 trillion commitment it made with Mag 7 and Oracle when it hardly has a few billion in free cash flow? They'll need to raise $500 billion more just to make the commitments. Yeah. I don't think they're going to have any problems raising money. I think that OpenAI, the parent company of ChatGPT, can raise $500 billion easily in an IPO. In fact, I think that might be the first $1 trillion IPO. Yeah. And when you look at companies like that, you have to forecast what you think revenue and operating profit, et cetera, are going to be 5, 10, 15 years in the future. And I certainly think that the market cap can reach several $1 trillion within a decade. Yeah. Okay. How do you convince an employer to sponsor you for an H-1B? Yeah, it's very, very hard. I have a lot of clients that are worried about this. You have to be able to prove that the return on investment on you will be much, much higher than $100,000, okay, in the first year even, okay, because we don't know the exact expense that it's going to be mandated by Congress, but we read the same publications that, companies have to pay $100,000 just to get an H-1B. So what you need to do is you need to justify your existence. Okay, and I can help you do that. Set up a call with me. You see the link in the description right here, right below me here. Okay, but what you got to do is this. You got to create a financial model that shows how much additional revenue you're going to drive for the company, okay? Or how much expenses you're going to help to cut. You have to forecast that and create a presentation to do it and sell yourself. And I'll help you sell yourself as well. Yeah, it's hard. I do have a client from India. I did a call with him yesterday, and he's got 6 months until his visa runs out. But there's a backdoor way to get a visa extended as follows, okay? You can actually do contracting work, okay, and get your visa extended if you're already in the United States. Yeah, and always talk to a lawyer first. Go to LegalZoom.com and talk to a lawyer, immigration lawyer, please. Did Goldman Sachs offer to sponsor you, or did you ask them to? Closed mouths don't get fed. You were in brackets. Yeah. They sponsored me. So when I got my job offer from Goldman, I think it was July or August of '98 when I started working there. They actually set up a visa for me, and I remember I had to get interviewed by immigration at the border. I was classified as an economist. And the way you're supposed to do it is you're supposed to prove that you can do a job that no American can do. I'm Canadian, which is BS. Yeah. And then when I worked at Goldman Sachs, in the year 2000, I was there on the trading floor. They were really nice to me. They offered to give myself and my Canadian colleagues green cards. And so they hired a lawyer called Tim Todd, really good guy, to actually do all the paperwork for me. And everybody got the green card except for me. And the reason was because 9/11 occurred, and I have an Arabic last name, and I was on some list. It's not fair. It is what it is. So it took me longer. It took me till 2007 to finally get it. But when I went through interviews with customs and immigration services, oh my God, they did a lot of due diligence on me. Like there was a thick pack of notes they had. They thoroughly did due diligence on me. And I actually felt comfortable with that. And there's a reason why we haven't had a repeat attack today. As much as people criticize the government, I think they've done a good job. Now, in terms of me being on that list, yeah, it sucked. But, I always spin a positive out of a negative. And so when I would go to LaGuardia after 9/11, lineups were cray-cray in New York. I'd always go right to the front of the line and, I'd talk to TSA and I'd say, I'm on that list. And they were really cool to me, and they would say, well, we got to give you a more thorough search. Then they'd ask me, do you want a man or a woman to search you? And I said, bitch, please, woman, of course. No, I said woman, of course. Oh my God. Just kidding. Yeah. Actually, I'm not. Yeah. So I got to the front of the line. It was okay. But it was hard for me to travel. I remember I worked at a hedge fund called Citadel, and I went to Frankfurt to go meet with the CEO of SAP. I think it's Bill McDermott, nice guy. And at the airports, oh my God, so many questions. They'd say, what is your race? And I was like, fuck you. Well, I didn't say that. I was thinking that. Yeah. So anyway, Germany stopped doing that. Yeah. Okay. I'm not on that list anymore. Yeah. But I'm very proud of my heritage. And for those of you curious about my heritage, my dad's Egyptian. My mom is half Lebanese. Yeah. Proudly Canadian and American. Yeah. All right. Next up, how do you work and behave in a day when you get up mad or in a bad mood? Does this ever happen to you? It does with me. How do you deal with it? Yeah. A couple things. So I don't wake up mad. What I do, maybe I'm not in the happiest mood when I wake up, but I always do this, okay? Every morning, including this morning. I practice gratitude. So I always thank God for 10 things in this order. Andrew, Matthew, Dylan, Christine, my wife, my mom, my dad, my brother, Jamie, the memory of my sister, Katie, I love you, I miss you. My little sister, Elizabeth, and all of you, my students and my clients. I'm grateful. Okay? You practice gratitude. That'll help you a lot. Okay? And then what I do is I read a chapter of a children's Bible here. It's just easier to read. Yeah. Gets me in a peak mental state. Yeah. And I monitor my sleep as well. And I'm such a nerd. I'll show you my new toy. I bought this product. It's really cool, man. It monitors my sleep. And it's called 8 Sleep. And I've never, ever had better sleep in my life. Okay. So what it does is, if I'm snoring, the temperature of the bed will change, okay? Or it will actually levitate the bed a little bit during the night and change the temperature. I absolutely love it. This thing is a game changer for me.
This is Pod 5.
I heard about this from Joe Rogan. Yeah, so I'm a marketing VP's wet dream. Sorry. But it monitors everything. Yeah, so my sleep has never been better. I've been taking this product called diphenhydramine for years. Talk to your doctor first, which helps with sleep. I'm almost off of it now because of this. Yeah. But yeah, anyway, that puts me in a better mood. What I also do, been doing a lot of recently, is I go to the sauna. And there are companies now where you can sign up for, I think it's $200 a month, maybe less, to get access to really high quality infrared saunas. And I'm going to show you. So Beam Sauna is one of the places I go here. Okay. And it's infrared light sauna I do it 3 times a week. It really makes me happy, helps me sleep better as well. Please try sauna therapy. Talk to your doctor first and all that crap. Yeah. And I actually just ordered one for my house, which comes in a couple of months. Yeah. And you can buy them at Costco now as well. Infrared light saunas, which I highly recommend. And I also do lymphatic draining now, which is a machine that vibrates for about 20 minutes with red light therapy. And lymphatic draining is really healthy for you because what it does is this. So there's a river in your body, and this river is to get rid of toxins. And so if you do lymphatic draining, which is that plate that vibrates for like 20 minutes, what happens is it kind of shakes out or drains all the toxins from your body. Yeah. And Tony Robbins does this a lot too, and he's one of my heroes, of course. Okay. If a stock beats earnings and goes up 40% year over year, does that mean the stock is bound to rise? If not, why? How does one know if news is not priced in? Yeah, couple things here. So if a stock doesn't go up on really, really good news, then all the good news might be priced in. Conversely, if you're looking to buy a stock and you're waiting for the floor and multiple negative data points come out in the stock and the stock doesn't go down, then it might have found a floor and that's a good time to buy. Obviously, do your own research first. Now, if a stock beats earnings by 20%, the stock usually gaps up 20%. Why? Because people base their target price based on a PE multiple in the future. I hope that makes sense. Social media interaction is actually going down. Australia banned social media. I saw that for under 16. Do you think social will be relevant in the next 10 years as so many people are sick and checking out online space? I think it'll be much more relevant. But my call in the next 10 years is this, my prediction. People are going to use more AI than learn from people like me. But people are going to start to get lonely. And as a result, online communities are going to flourish, where you get real interactions with real people. And that's where my business model is going right now. And so what that means is this. So I have a community now where my members can interact with each other. Okay, it's pretty small. It's 100 people only. And we pre-screen interview people first. They get access to all my courses, 100 Hours for Life, and all my electives and all that stuff. They can watch it, access the iOS app or Android app as well for it. But the most important part of this is a sense of community where people love each other, they help each other as well, they introduce themselves, they share wins, etc. And I think this is where the marketplace is going longer term as well. Yeah. Okay. But I do think social media will be more relevant in the long run. But what will be more relevant is a sense of community. Yeah. I was doing SQL, meaning structured query logic, for database research data analysis. And it's simpler and easier than expected. It feels like my great grandma is yelling at me via email in all caps. Yeah. Yeah. Okay. Pulasi, good to see you. All right, next up. Hi, Chris. Hope you're well. Likewise. I'm a huge fan of buying companies and stocks and holding them forever. Excellent. Is there any case when selling a stock is a good idea? Absolutely. Okay. So let's say that you do investment research on a stock, okay? And this is just dummy data here. And you have a one-page report or a detailed report, okay? And you print it out after you do your research, okay? And let's say that a year goes by and all of a sudden you want to sell a stock. You're freaking out. It's probably because some new news item came out that makes you worried. Here's what I want you to do before you panic. I want you to go back to that one-page report that you wrote a year ago. Okay, I feel like a robot. And I want you to look at it and read it. And I want you to ask yourself this question. Okay, the stock is down today because of reason X. Had I known about reason X 1 year ago when I wrote this report, would I still have bought the stock? If the answer is no, be unemotional, sell it, move on. If the answer is yes, and if it's not a full position, buy more. Okay. Next question is, we know crypto will be 21 million. I think you're talking about Bitcoin's maximum supply, which will be 21 million by the year 2140. Currently, you got 20 million. As the white paper states, it also decentralized mining makes it impossible for most to compute to crack the code and break the market. Yeah, and if you have a question there, please let me know. Thank you. Okay. How did China record another surplus of $1 trillion again, second in a row, without the U.S. exports? As exports to the U.S. were down 29%, still China made a boatload of money again. Why and what is going on? I don't know if I trust the data. Yeah. All right. Next question. My opinion on Bitcoin is definitely bullish on the long term. That is, in an ideal world, with an ideal scenario. Today, there isn't enough regulation with crypto. Crypto theft is still big. Yeah. And I agree. I think that 99% of all cryptos are an absolute scam. Please always do your own research. And I don't care if a stock, for example, has a cure for cancer. Never make it more than 5% of your portfolio. Good risk management allows you to trade or invest another day. Yeah. I was reading Warren Buffett's letter in 2024. He said something so cool. He says he never cares if a founder went to an Ivy League. I agree. Or not. He does not even care if they went to school or not. Why? Yeah. So I think a great founder and a great CEO and a great entrepreneur is a great salesperson. And the problem with university is they don't teach you the most important skills. University, I don't care if you went to HBS, 2/3 of HBS is BS. But universities and the best business schools don't teach you the following things. Number one, how to sell. Number two, how to network. Number three, how to present. Number four, how to manage your own money. They teach you how to manage other people's money. Number five, how to use AI the right way, how to use social media, etc. And that's why I do what I do. Okay. And so when I worked in the venture capital sector, I think it was like 12 years ago or so, I wrote this book. 101 crucial lessons they don't teach you in business school. I think traditional MBA education is a waste of money. I do. And that's why I do what I do. Yeah. Alexa, stop. Okay, that is a reminder that I have a guest speaker that I'm going to interview in a second. Give me a second here and I'll show you behind the scenes. I'm going to open up Zoomy. You'll like this guy. All right, hold on a second. Okay. Let me open up a browser here. Sorry, guys, give me a second, please. All right, bring browser into view here. And I will go to Zoom. And the guy we're going to interview, his name, that's my alarm telling me he's coming on. His name, Pol Brau. Really good guy. So give me a second just to get this all ready. Opening up Zoom. And you guys can ask him questions too. And I'll wait until he comes online here. Okay, so I'll give him another minute. Paul, if you're watching, please sign on to Zoom now. I'll come back to that in a second. Thanks. All right, let me take questions here first. Okay. Why does action matter more than education pedigree? Yeah, I mean, education might help you get your first job. But I really believe that my kids are the last generation that feel that they might have to get an education or think about going to college. But the fact of the matter is that a lot of people get into Ivy League schools or Oxford, Cambridge, that sort of thing because of their parents. Their parents went to the school, so legacy they get in, it's bullshit. And why is it, like when I went to Columbia, I did my MBA there. Why is it that a lot of people in my class, most of them, or a lot of them at least, I should say, have parents that were insanely rich, billionaires? Why is that? Why is it a lot of people that got in, their parents or uncles or aunts or cousins or brothers went there as well? For donation, I guess. That's not really fair, is it? So I think that traditional education is in secular decline. Think about it. You spend 4 years of your life in undergrad, costs you 100 grand. You have 13 hours of class a week and you don't learn jack that can help you in the real world. So yeah. All right, Paul is here. Give me 1 second to set this up. And I will bring Paul in and I'll start to interview. Okay, so no to notes, yes to Paul. Okay, great. All right, let's do this interview. This will be fun. All right, excellent. And let me make sure everything is working with Wirecast. Check, 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 check. Good. Excellent. All right. So,
hey, Chris.
How are you, man? What's going on?
How you doing? All good.
Excellent, excellent. So I want to introduce you all to a friend and a student of mine right here named Pol Brau. And what I'm going to do is I'm going to interview him, and I want you to all ask him questions if you want to in the chat. So Paul is a digital business leader with a journalism background, and he works at the intersection of tech, strategy, and communications. And he currently serves as a general manager for a tech company backed by one of the largest Nordic energy groups. And earlier, he was among the first employees at a U.S. startup that went through major Silicon Valley accelerators. And so Paul is actually known for taking really complex topics and making them clear, whether speaking to teams, the media, or the board. And so, Paul, thank you so much for joining us today.
Thank you, Chris, for having me. Yeah, always very interesting conversations and topics that you raise up on your weekly call. So it's a pleasure to be here.
Excellent. Thank you. Thank you. And I met Paul the first time, I think it was back in the summer of 2018 in Barcelona. He was one of my students, and he gave me a couple of sweatshirts, soccer, football sweatshirts that I wore on my webcast. So thank you. Okay. So my first question for you, Paul, is how do you keep your message clear when speaking with the media?
Yeah, so Chris, I think that a lot of people get kind of scared when they have to speak to the media or they need to speak to some stakeholders or owners. So I think one of the most important things when communicating is having proximity, right? Reminding ourselves that we are human beings and we're talking to other human beings, and we all have feelings, and it's very important that we feel close to each other and that we know the needs of the counterpart too. So if it's a journalist, for example, they want to know more about your business, about your background. So it's important that you understand that there's a sort of trade happening there, and that you basically need to provide them with that because it's their job, right? Or even if it's your colleague or your boss or a board, right? They all have their own interests and needs, and it's important for you as a communicator that you identify them properly and then provide them with what they want, right? And then it brings me to also a third topic in that question that would be that once we feel, let's say, close to the counterpart, we understand their needs, it's important that we eliminate as much as possible ambiguity, right? And we talk in clear sentences, and don't leave space to guess, because the guess space is usually not good for you, right? So it's important that that we communicate in clear sentences and clearly stating what we want to communicate and what's our end goal too.
Right.
And that way we eliminate basically that ambiguity, that room for like misunderstandings that might not be useful.
Excellent. Oh, thank you for that. It's interesting. And the way I've dealt with the media over the years is I will find the top 20 or 30 journalists in a particular sector, and I'll send them emails, and the subject will be this: resource for your articles. And I offer something up, and I've gotten in the Wall Street Journal and messages from the Wall Street Journal return because of this. I say, Joanne, hope all is well. I work in ed tech. Please let me know if you ever need me as a resource to help you with your articles. Thanks. Okay, so it's a give and receive like you mentioned. Okay, next question I've got is, what's one lesson about making decisions under pressure that you wish that you'd learned earlier in your life?
Right. Yeah, it's tough when because you were talking about, I think, in a very good way about building a career and promoting and getting into like this high stakes positions that eventually we all, or most of all, wants to get in. And then you always get a constant when you're at on a role with big responsibility, is that you always need to make decisions under pressure, right? Because you need to make the calls that no one else wants or wants to do or can do, right? So it's a constant. You always get the opportunity to make decisions under pressure. So the first thing is creating a system that has no ambiguity again. So identify, for example, clear no-goes, right? So if we cross that line, we're not going there. And also having, again, a clear goal or direction of where do we want to go. So we want to go there. You sometimes mention it in a very good way. Sometimes we don't know the path, but we know the destination, right? And it's very important that we have the destination super clear and then identify the no-go zones in where, like, all right, if the destination is there, but we stumble upon this no-go zone, we need to find a way around, right? And this inevitably makes you create your own system, right? And you, day by day become better at that, at identifying no-goes, at clearly stating them, and not forgetting what your clear goal is. And that also avoids, confused urgency, rushing, because you've already planned beforehand. And Chris, you know about this a lot, right? So most of the plans in business usually don't go as you expected, but you need to be able to adapt. And so by identifying areas where you don't really want to end and having the clear direction, you then make things easier for yourself.
Now, Paul, if you're in a situation at work or you're being interviewed by a journalist and they ask you a question, and no matter what your answer is, it's going to come back to hurt you, how do you respond?
So if it's going to be a potential backslash, and especially if it's a journalist, you have the risk that if you communicate something and they feel that you, A, don't know the answer to that, or B, you're hiding stuff, or C, you clearly are, pulling things out of the roof, then it's going to be bad. So sometimes it's better to be completely transparent and say, I don't have the answer to this, or if I can do something to help you get this answer, like data that I can check, I will come back to you and give you that information if I'm able to. But be transparent, because usually the first thing is like, all right, I'm going to try to find a shortcut to get to this answer, but then usually it backfires, right? So being transparent about what you clearly can communicate or cannot, and even if it's, I can't provide you with the answer to that, saying I can give you an answer to this, it's way better than just trying to sound like, not really clear about the answer, right? So that's basically one of the main, I would say, the main things that you need to keep in mind.
Transparency builds trust. I like that a lot. I remember years ago I was interviewed at Goldman Sachs for a job back in the summer of 1998, and they tried to see if I was BSing. And so what they do is and this happens a lot for other people being interviewed as well, they start big and ask questions until you can't answer them. And I'll tell you exactly what happened. They said this, the interview. The guy's name was Jordan Waxman. I remember he said, "What markets do you follow in Europe?" And I said, "Well, I follow France, the CAC, DAX." And then he said, "Give me a company you follow in the DAX." And I said at the time, Daimler Chrysler. Then he said, "Who's the CEO?" And I said, "Jürgen Schremp." And he said, "Who's the CFO?" And I said, "I don't know, but I'll get back to you." So there's nothing wrong with that in interviews, I guess, as well. Okay, great. Yeah, cool.
But we tend to think that there is something wrong, right? But usually the wrong comes when you make something up. And it always backfires, no matter when.
Yeah, makes sense. Absolutely. Okay, great. Next question I've got is, you're very good at this. How do you explain complex ideas so people, meaning the press, team, colleagues, board members, actually understand them?
So again, it brings me back to starting with the end goal. What do we want? The way I put it sometimes, Chris, is that sometimes we gather big groups or even consultancy firms, or to try to tackle a problem, right? And the problem is that, let's say someone is thirsty, right? And then you, with your team, start to think about like how the perfect bottle it is and how it should look and what size it should have, colors, even shape. And then nobody thinks about the water. People are thirsty. They want water. I mean, yes, the bottle is important because it's going to help us stand out, right? But nobody's thinking that what we need to focus on is the water, because it's actually what's solving the problem. The rest is helpful, very helpful, actually. Right. But it's not going to solve the problem. If we give that people an empty bottle, it's not going to work, right? It needs to have the best water you can have, right? So that brings me to this. It's you need to start with the end goal. What's the end goal? That people are thirsty, and then how are you going to solve this problem? Well, by providing them water, so to speak. I'm simplifying, maybe oversimplifying, but I'm sure you get the point. Yeah. So you're giving them water, and then what comes the rest? Well, let's make a beautiful bottle afterwards. Once we've solved the core problem, the core need, right? So breaking it down to the ultimate need that we're trying to solve, it's very important. And then sometimes what I tend to do is interviewing, even if it's an informal interview with someone in my inner circle, whether it's my wife or even my mom, my dad, my best friend. So I asked them, what do you think about this place, a complex problem there or complex idea? Yeah. If they're not able to answer back with, yes, I understand this is what you're meaning, then it's usually very complex, because then you'll try to sell this to your audience and they will most likely don't understand, right? Because your inner circle, they're making them, they'll try hard to understand you, right? And maybe your audience will not try as hard. So that's important.
Yeah, that's great. No, excellent. I remember, so I used to have my column years ago in Inc. magazine. I've got one out in Forbes, and my editors always tell me, Chris, stop trying to write like you're writing for The Economist. Write at an 8th grade level. Right? Because your total addressable market is bigger. That's my maturity anyway. And one quick story I want to mention. I used to be on the board up at McGill University for something called the Dobson Cup. There was 5 of us on the board up there selecting startups. One of the guys on the board, who's way more successful than me, his name is Ruben Gruber. He started companies like Sonos and tons of others. He's never failed. And I asked Ruben, I said, why is it you never fail? And this comes back to your point on complex, making things complex, easy to understand. And so Ruben Gruber, who lives in Boston now, he would tell me, Chris, before I start a tech company, I always fly up to Montreal and I have dinner with my 90-year-old mother. And she knows nothing about tech. And if she doesn't understand the business model during dinner, I don't launch the company. Yeah. So keep it simple, stupid, they say.
Right.
Yeah.
Absolutely. Yeah.
Cool. All right, great. All right, next question. What helps you stay calm and clear when things suddenly go wrong?
So there's also one thing, and another constant is that, and you know this too, Chris, and a lot, I would say, is that when you're building a business, there's nothing like a happy path, right? So it's an emotional roller coaster, and you're sometimes up there and then down there. And so you need to expect that things will eventually go wrong. And you need to be able to adapt. And when that happens, which happens to pretty much all of us, even your colleague that has no failures probably has gone, I'm sure that he's gone through very, very tough times. So it's about focusing on what you can control, right? And it might be some kind of like stoic thinking here too, but focusing on what you can control, because there are many things, and then many things that we can't control that blur our minds and that add more stress on top of really high stress that we're experiencing on those moments, right? So focusing on what you can control. So we have a crisis right now. This is going really bad. So, all right, what can we do that can bring impact to this? Again, with the end goal in mind. What's the end goal? Having a solution to this crisis. All right. what's the best take to get there, and
Right.
what and you can even like identify 2-3 takes on like possible outcomes, but then what's the one that we can control the most?
Yeah.
Right. So let's double down on that one, because we might not have a second opportunity to tackle this because we're already in a crisis, right? And then also it helps me, at least personally, to see from the outside, right? And try to like detach yourself from that situation as much as you can, and think of it as, if I would be my best friend, or if I would be the Chris or the Paul from like 20 years from now, how would he react to this? Right. And how can we prepare then again for this? Because pressure is actually something that's predictable. If you're at a high stakes position, you will always have pressure. So it's something that it's really predictable. So if you anticipate to that pressure, then you almost end up not fearing it because you're already prepared. So I would say that focusing on what's controllable, then detaching yourself from the situation and be able to see from the outside, and then preparing and expect the unexpected, because it will always hit you. And even if it doesn't, well, you already are prepared. So it's not bad, I would say.
I love it. Focus on what you can control. Let me throw you a curveball. Okay, so your family is very close to some of the best football players on the planet. Work together like Messi and many others. Can you give us examples or mindset tips on why they're successful in pressure situations?
So I think that with all, I would say, any elite sports, but I would also apply this to business, Chris. All elite players, no matter if we're talking business or sports, they have one thing in common, is that they manage pressure enormously well, right? And it makes a difference. They're great skill, whether it's soccer players or basketball players or baseball players, that they are really technically good. But then when it all comes down to that single match, right? The Blue Jays are about to win, and then they step up. And then they show up, and they show up the leadership skills needed. They cheer up the team, and they add up that kind of like, it's even like, it kind of feels like magic, right? But when they step in the field, everyone else is like, all right, we have this, right? So they have this sort of aura, whether if it's something that it's been built from the ground up or they were born with that, but they have that. But it all comes down to the way they manage stress and pressure. Because when you're like, I don't know, on the Champions League final, well, you have one single match and it's 90 minutes. And sometimes you start that game and you're losing, but then you need to win. Then you need to show up. And there's a lot of pressure there. So pressure management, it would make the difference, because it gets to a point, Chris, when you're at an elite level, and again, it doesn't matter if it's football, if it's basketball, or if it's business. When you get to a certain level, everyone is good, right? Because the skills are there, because otherwise you wouldn't be at that position, right? So everyone is good. Yes, we can identify someone that's better than some others, but again, if I'm generalizing a little bit, but everyone is good. But then the ones that really stand up are the ones that, when they are needed, they show up, they manage pressure, they know the end goal, they know the destination, and they won't let anything stop them. And they know that there are going to be a lot of things that come their way, but they accept that's part of the journey, even if it's on a single match.
I love it. I love it. Thank you for that. And Daniel wrote here, this sounds like cognitive behavior therapy. Any thoughts on that?
I don't know to what Daniel is actually referring to what on that. If it's referring to I don't know to what he is referring to. But maybe if he can elaborate, then I can help out. Absolutely.
Daniel, please let me know if you have a follow-up question based on that as well. Thank you. Because I'd love to learn more about that as well. Okay, so next question I got for you is, what do people get wrong about communicating in high-stakes moments, meaning press interviews or board meetings?
Yeah, so there's one thing that I've found, and of course, I found with myself first, that everyone does. It's over-explaining and overselling, right?
Yeah.
When we are under stress and we want to get something done or right,
Yeah.
we're pitching to an investor, we're talking
Yeah.
to a really top-tier media journalist, and we really want to get featured. We're talking to our boss, our manager, our board. We want to show off, right? First of all, and we want to look like we are smart and we are a star, right? And that's something. Sometimes, I mean, it's not. It doesn't really pay off. What I think is that we really need to be useful, right? And we really need to show that we can solve the problem. We can answer to that question. We can provide that piece of information that will help the journalist make a really good piece that will make him or her look well too. So there's a lot at stake. It's a trade, right? So first of all, to me, showing off, it's usually not really good. It's more about how can be useful to that person, how can be useful to my colleague, again, to that journalist. And then when we have identified a way to be useful, it's about what I was saying at the beginning. It's not over-explaining or overselling, right? When it's sold, it's sold. You don't really need to explain anything else, right? So a lot of people, they try to win the moment instead of like informing. And yeah, I think it all boils down to being useful and not trying to be impressive, because most of the times I don't think it pays off. And so choosing the words, being extremely, clear with your communication and choosing the words carefully. So trying to avoid any jargon and be like, all right, understanding that maybe the counterpart is not on your day-to-day business, right? So they don't understand what you're doing. They don't understand what you're working on. So try to choose the words carefully, but avoid over-explaining. And the final line would be, don't show off, just be useful.
Yeah, I love it. And you mentioned overselling as well, and I love that. One thing I learned is that not to sell past the close. And what I mean by that is the second that you sense somebody is interested in buying your product, immediately stop selling. Otherwise, they think the following. When you're first selling it, they're like, oh, I like this dude. I like the product. Yeah, I think I might buy. And then you keep selling, and they think, wait a second. Why do they keep selling it? I'm already on board. Am I missing something? Is this a scam? I'm not buying. Yeah. Okay. Yeah. Cool.
Absolutely.
Cool. Excellent. All right. Next question I got for you is, what mistake taught you the most about leadership or communication?
Yeah. So to me, it's honesty with yourself, starting with yourself. I think it works wonders, Chris, because sometimes when we're maybe younger, junior, choose the adjective that you want, but we tend to even lie to ourselves and thinking that something that we're pursuing, a business that we're pursuing, a career that we're pursuing, it's worth it because of this or that. And we made all sort of stories in our heads. And sometimes you're not being honest with yourself, right? And if you're not honest with yourself and you don't identify, for example, the direction that we're taking, it might be so that you're managing a team, you're managing a company, and then you know the destination again, but then you think that you're doing well, but if you're honest about it, you identify areas of improvement. We all have them, right? And it helps you eliminate the noise around it and lead your team purposefully, right? And because your team will rely on you on the direction that we're taking, because that's the reason why you're managing the team and you're the leader, the team lead. So they trust you. And it's very important that they trust you. And if you're not honest with yourself and you don't assess the situations, the thousands or myriad of situations that you will encounter yourself in, then the people will feel that there's no clarity, there's no direction. So I think that being honest with yourself, honest with the goal, it's what's going to help you to make the path, to choose the right path and to lead the team towards that path and getting the goal. Let me set an example, right? So it might be so that, you have a certain goal, whether if it's sales or if it's having a product launch or something, then you will for sure encounter a lot of situations in between. And when I say situations, usually not so good situations. So if you're honest with yourself and not trying to be, Mr. Brightside, and all right, this is not working well, and we need to be honest about it. What's the way to change it? Because if you stay on track for like a significant amount of time, then by the time you realize it's gonna probably be already too late.
Yeah.
So being honest with yourself, it's the best. It works wonders for you and your team.
I love that. Well put. Okay. Lastly, what simple habit can people start?
Okay.
Yeah. So last question is, what simple habit can people start tomorrow so they can communicate better under stress? Yeah.
Yeah. So I'm going to pick some of my previous topics or lines. And the first one to me, it's starting with the end goal.
Yeah.
So why are we doing this?
Yeah.
In journalism, we have the how, what, where, when, how, right? So it's starting with a why, right? So why are we doing this? Whether if it's pursuing a project, whether if it's starting a company, or it's basically that. Why are we doing this? And then thinking backwards, right? We want this. And then what are the next steps to get there? But I sometimes do that backwards, right? So we want to launch this product. All right, to launch this product, we need to, first of all, have an MVP, right? To have an MVP, then we need to work on these critical features. So for feature number one, we need to assemble this team or have these people there. And they will need these tools, right? So having the end goal, it's the most important thing because that's your North Star. That's the direction. Chris, there's a good sentence that a good quote that you always mention. It's skating where the puck is going to be, or not where the puck is, right? So it all comes down to that. If you know or have a good guess on where the puck is going to be, then you have a clear direction, right? And that will again eliminate a lot of noise. And then then that's one thing, and then taking the other's perspective into account, because they most of the times they don't know what you know, right? And even if they're a team member and they know what you're working on and everything, they might have some information silos that they don't really know something. So taking the other one's perspective and acknowledging that they might not know all that you know, it's important. And then the last one would be being clear and choosing your words carefully. Try to avoid jargon as much as possible and trying to be honest and clear about what you're trying to communicate.
I love that. Thank you. All right, let me take a question from the audience here.
Sorry, I don't understand.
Whoa, that was Siri. I don't know why Siri is talking. Turn that off. Sorry. All right, question from the audience here. Anas wrote, hey, Paul, hope all is well. Should more people pursue journalism when AI can do good narration and writing and explaining and talking and even making fake news, as we say it? Thanks a ton.
Yeah, thanks, Manas. And yeah, that's $1 million question, right? But I think I have two perspectives on this. So although I've never actually worked as a journalist because I ended up in tech and then more on the business side, I've always loved journalism, and I will never regret choosing journalism as my degree because there's one single thing, no matter what industry you're in or your job or whatever, there's one thing that you never stop doing. It's communicating, right? And communicating effectively and knowing how to communicate, whether if it's writing or speaking, it's so critically important that I think that it has helped me out. Then later on in my career, I had to deal with the media. And then, of course, having a journalism background has helped out a lot. But I think that there's one thing that it's very important is that journalism teaches something that we never stop doing. It's communicating and doing that effectively. So, but then that brings me to the second point is that, all right, so that's maybe more like let's say something beautiful, right? But then it comes to the business, and yes, so AI can pose as a threat or not. I do believe, and Chris, you made a really good statement a few minutes ago, is that with so much AI, people will return or will want to eventually return to what was life without AI and without so much tech, right? Mm-hmm. And I think that AI for now, and this might be outdated in a few maybe years, but AI for now can feel like humans feel, right? And a lot of journalism, a lot of stories that journalism tell, they are tied to feelings and human perceptions and on how they see things. And there's that part that makes it, to me, hard for AI to replicate, because even if they would they would probably not sound as credible, or they would add this hyphen or something that clearly identifies that it's an AI. That's my take, basically.
I love it. And what Pol's referring to is when you guys use AI, sometimes you'll see it does a double dash. Always make that a single dash, because everyone knows you're using AI. All right, Pol, I want to thank you so much for your time. God bless you. It's always great having you on the webcast. Thank you.
Thank you so much, Chris, for having me, and hi to everyone, and thank you for this time.
Awesome. Thanks, brother. Take care. Thanks.
Bye.
All right, that was fun. Give me 1 second. All right. So what I'm going to do now is, give me 1 second. I am going to take a very quick break. I'll be right back. Thanks. When you think of accounting and finance, what comes to mind? Don't worry, this is not my course. I have something just a little more special planned for you. Do you want to learn about accounting and finance in a way that you've never been taught before? Of course you do. My visual approach will teach you everything you need to know, and it will be a lot of fun. In fact, you'll wonder why you weren't taught this way in school. Oh, and if you get a moment, please check out the student reviews to see how so many people have enjoyed the learning experience. And you know what the best part is? No experience is necessary to take this course. So if you don't know how to model and value a company, analyze a cash flow statement, or understand the difference between growth and value investing, not to worry. We will cover all of those concepts from scratch. So why should you learn accounting and finance from me? I have an MBA in finance from Columbia University. But more importantly, I have work experience in the real world, from Goldman Sachs to several hedge funds, to venture capital and consulting firms. I've raised and managed over $1 billion in my career. Now I'm passionate about sharing my knowledge and experience. My life has turned full circle, from my own education to my experience in business, to investing in and founding several companies. Instead of teaching boring finance and accounting theory, I teach based on my own real-life practical experience, and it has led me right here to you. I want you to understand how to create, analyze, and forecast an income statement, a balance sheet, and a cash flow statement. I want you to thoroughly understand and enjoy finance and accounting so that you can be inspired to achieve all of your career goals. I have the tools needed to get the job done. So let's do it. I'll see you in class. All right, thanks for letting me take a break. I think that was like 7 or 8 years ago I recorded that. It's so funny. I'm trying to always compete with myself in hindsight to stay younger, because, you know, the older I get, the better I was. All right, let's move on to the next question here. Do you think private equity in 401k or more is a good thing or not? Yeah. So what Manas is referring to is the Trump administration is trying to make it feasible and acceptable for us to invest in private asset classes in our 401k. I'm completely against that. And here's why. So in order to invest in alternative asset classes like private equity, venture capital, or hedge funds, which are very risky, you have to become what's called an accredited investor. What that means is you got to have a liquid net worth of over $1 million, make a couple $100,000 a year. And the government sets that up to protect us, okay, to protect us, because these asset classes, hedge funds, venture capital, private equity, are sometimes very, 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 very risky. And especially when it comes to venture capital and private equity, you don't get a return on your investment, if ever, except every 10 years or so. So I think it's fiscally irresponsible to allow the general public to do that if they're not accredited investors. It's my humble thoughts. Okay. All right, next question is, do you think efficient market hypothesis is accurate as coined by Nobel laureate Robert Shiller? I think he's completely wrong. And so you got to be careful of economists because they're very theoretical. Like in the real world, none of us use supply and demand graphs. It's all hogwash, right? And you know, there's a very famous saying that I'm going to butcher, which is economists have successfully predicted 28 of the past 3 recessions. Now, EMH or efficient market hypothesis means that you can't pick stocks because all the news is already priced in. And that's BS. We know it's BS because there's a lot of hedge funds and professional investors and retail investors that outperform the S&P. Yeah. So all the positive news is not always priced in if you do your work. All right. If you get a 15% return and we follow the rule of 72, I think 30 years will have a good chunk. Yeah. So rule 72 means 72 divided by the return rate. That tells you how many years it takes for your money to double. So if your annual return is 7.2%, then 72 divided by 7.2 is 10. That means 10 years till your money doubles. Yeah. Yeah. What do you think of quantum computing and the future of it? Is this the next bubble in the making? Yeah. I'm incredibly bullish on it. There's really not that many pure plays in the sector. I talked a lot about this in the last call we did last week on this. I do believe it's only a matter of time until we have quantum computing in our pocket. And what that means is this. So computers, traditional computers, this is a computer as well, what they do is they analyze ones and zeros. Okay, it's 1 or 0, binary. Quantum computing does ones and 0 at the same time, more efficient. Okay, better for AI. Yeah, meaning it builds large language models faster. Okay. Oracle dropped a bit due to poor earnings. Do you think the markets are getting too greedy too soon? Yeah, I think the markets are definitely overvalued. I am bullish on Oracle longer term, that's for sure. It looks like expectations got a little bit ahead of itself after the most recent 30% spike in the stocks over a couple days of previous earnings. People look at deferred revenue, meaning what the pipeline is for future growth, which is a little bit worse than expected, hence the pullback. But I'm bullish longer term Oracle. Why? Because I think it's probably one of the best and most solid AI plays. Because what is at the epicenter of AI? It's data and large language models. Oracle stores that stuff. Yeah. What would make me less bullish on it is if Larry Ellison was no longer involved in the company at all. Because I think when a founder leaves a company, investors should run for the exit always. Yeah. Okay. All right. Okay. What kind of social media platform will you want to see next for the future? Yeah, I think a social media platform where you can have your own customized small community groups. So platforms on a platform, so to speak. Okay, and that's why I'm really bullish on this company called Circle, not the crypto company, but Circle, which makes social media platforms, of which I've licensed. And I'll show you how this works. Okay, so there's a company called Circle.so. Give me 1 second. And I am going to maximize this so I don't run into this problem in the future. Okay, so there's a company that I like a lot. It's a private company right now called Circle. And what they do is they create branded products for you so you can have your own community. And that's exactly what I've done with my product now. All of my clients that sign up for my premium products get this for free now. And so they get all my courses here. There's also an app for it as well. But more importantly, there's a member directory where people can share wins, ask questions, introduce themselves, etc. This is the future here because AI is very impersonal and is depressing. And the reason AI can be depressing for a lot of people that want to learn is because if you learn from AI, there's no social interaction. And so that's why I'm bullish on Circle.so, private company, and that's why I've licensed it as well. I pay for the highest tier product cost. I think I spent about $50K a year on it. That's how bullish I am. Okay. Which I get too expensive, of course. Okay. Oh, hey. Raphael from Cohort 1 says, hi, I'm listening to you while I'm on a long drive. You're awesome. Thanks, brother. Great to see you. And I think the long drive you're probably doing is from Florida to Brooklyn to see your family, maybe vice versa. Excellent. God bless you. I miss you, man. Thanks. Okay. A ton of private equity companies are buying experience-based companies like sports clubs or soccer teams Or EA, for instance, why and will AI increase that too? Yeah, I think it's a little bit separate. So when you talk about EA, Electronic Arts, it's a software company, a video game company. So that's completely different from a sports-based company. The only reason to invest in sports franchises is for the capital gains you get from selling the club. Otherwise, you don't make money. I have a lot of friends that own sports teams. A good buddy of mine is the largest owner of San Francisco Giants. You don't make money every year. It doesn't work like that. You only make money once you sell the club. That's it. Yeah. So I don't think it makes sense for private equity firms to invest in sports clubs because they don't throw off a lot of cash each year. What is the point of keeping oil ships from Venezuela? Is it geopolitically safe? Yeah. So I'm going to explain my thought process. We got 20 minutes left, and then I got to go to do my weekly Zoom call with my premium clients. All right. So here's my thought process on Venezuela. Okay. Communism, bad. Okay. Russia, what they're doing with Ukraine, bad. Therefore, Trump administration getting involved in Venezuela. What does that even mean? Well, Venezuela's got the largest deposits on the planet of heavy oil, used largely for diesel. Okay. Now, a lot of that oil, right, that heavy oil, diesel, in Venezuela is really not being mined, so to speak. And it's because of really shitty administrations there that have destroyed the country. So Russia is funding their attack on Ukraine, spreading communist filth, that's right, because they use their heavy oil, meaning diesel. They sell it at a premium. Prices are high. If the U.S. were to peacefully make the Venezuelan administration turn over and open up the markets, then Venezuela can sell more heavy oil, meaning diesel stuff, in the open market. What that does is it drives down the price of diesel materially, which hurts Russia from funding communist filth. That's what I feel about it. Now, I pray that there is no land attack and people stop dying. But when it comes to attacking ships that are transporting drugs, I don't believe in death, but I am very much in favor of the war on drugs. Because for those of you that have not had a family member or friend or somebody you know pass away from fentanyl, you will at some point. And I know too well what that's like. Yeah. Okay. And be careful, guys, with politics. I know I do it. So there's one of the biggest semiconductor companies in the world is a client of mine, and I do a lot of speeches for them. And they've asked me to tone down my anti-communist rhetoric because they have a lot of employees in communist countries. But I won't do that. Okay. And that's like 25 or 30 grand a day in fees for me when I do that. But I'm an idealist. Yeah. Okay. Give me 1 second. Do you think BRICS, meaning Brazil, Russia, India, and China, and South Africa, and BRICS was coined by Jan Hatzius, who I worked with at Goldman Sachs years ago. Do you think BRICS will be a headache for Western world in 50 years? Too many young people and too big economies. Yeah. I'm very bullish on Brazil and India longer term. I love India. It's the world's most populated country, world's biggest democracy. Very bullish. Now, the countries in BRICS that are communist, I don't think they'll be successful in the long run. Communism doesn't work. It's filth. Yeah. And I can go into more detail if you want me to. And a quick side note, I don't want anybody on this call to ever follow any politicians on your LinkedIn profile because half the people will like you more than the other half. I don't know what half. Yeah. Okay. If a stock hits a target price, you sell immediately, but most of the times it doesn't hit. How do you know when to sell? Yeah, it's pretty simple. When a stock hits your target price, meaning your price earnings target based on your earnings estimates in 5 years, then you sell. It's that simple. But quite often, shareholders hold on to stocks and they have target prices because whenever companies report earnings every 3 months, if they beat earnings by 20% every time, it pushes up their target price by 20% every time. And that's why whenever a stock reports earnings and they beat estimates by 20%, the stock gaps up 20% and vice versa, because investors are not expecting multiple contraction or multiple expansion. Yeah. Okay. I'm a bit worried by the verse about the camel going through the eye of a needle. What's your perspective? Yeah, my dad's half Egyptian, so I can talk a lot about this. That was awful dad humor, sorry. Yeah, for those who are not familiar with it, that's a passage from the Bible which says it's easier for a camel to go through the eye of a needle than it is for a rich man to get into heaven. I don't know, man. I don't take everything literally, but as long as you share your wealth with others, you'll be successful. And there's a really interesting book. I'm going to summarize it for you in a minute. Adam Grant wrote this book called Give and Take. And the most successful people in the world, okay, by net worth, which doesn't mean I respect you more, but the richest people in the world, the top 1% are givers. Okay? And one of the reasons they're successful is they give. They help people a lot. Give and you'll receive, its prophetic's been true since the beginning of time. Yeah. Yeah, but I don't take anything literally. I interpret everything myself. Yeah. I love the New Testament. Old Testament's kind of harder to read. Of course, there's a lot of factual stuff in it as well. But my hero is Jesus. Yeah. Okay. And I love both books. What are the various risks and techniques to buy stocks based in foreign currency and markets? I'm based in India. Yeah. So I don't think it really matters where you invest. You can follow the 100-step template I provide you with, but make sure that stocks are liquid. Okay. Always, always, always. Yeah. But there's certain markets I will never invest in. Okay. India, I love. I invest a lot in India, tons of sectors, love those markets, right? And if you want exposure to India, just buy the Sensex. Yeah. If you don't have time to do research. But there are various markets I just don't trust. Okay. I don't trust the accounting in China. And that's not a knock on people from China. It's just the accounting. I've been burned before. And I certainly don't trust the accounting in Russia. You know, I've been burnt. You know, I invested in Lukoil and Gazprom many years ago because they both traded at 3 times my earnings estimates. Fraud accounting. Yeah. Yeah. But the Chinese companies I will invest in are the ones that are duly listed that file 20 Fs in the United States. Great companies like Baidu, et cetera. Do your research first. Thanks. Okay. Next up, Haroun wrote, "Hey Chris, hey, can I move some of my 401k money into a Roth IRA? Can I just invest in index funds, or should I actively invest with my Roth IRA? Please advise. Thanks." Yeah, you want to talk to your accountant because everybody's tax mandate is completely different. Yeah, for those of you not familiar with Roth IRA, here's how it works. A 401k, what happens is you put money into it, it grows like crazy, and then you take the money out and you pay tax. Roth IRA is a little bit different. You pay tax first, then you put it in, and then it grows like crazy, and you take it out, you don't pay tax. The only reason you should invest in a Roth IRA, talk to your accountant first, is if you think your tax mandate, meaning the taxes you're going to pay, your tax rate is going to be massively higher in the future. Now, there are certain people like Peter Thiel that have used Roth IRA to their benefit in controversial ways. So what Peter Thiel did, apparently, according to people familiar with the matter, meaning the media, what he did was Palantir, which I invested in privately, and I partnered actually with him at Founders Fund when I worked at Venture Capital. What he did was he took his Palantir investment at 0.00001 cent per share or something, and he paid taxes on it, put the $6,000 into his Roth IRA. Now it's probably worth over $20 billion. Yeah. You can't have a controlling stake in a company to do that, though. Yeah. Talk to your accountant, please. And for those of you who don't have accountants, please get one. I'm going to get down on my knees and beg here because I care. Okay. And it hurts when you get on your knees when you're an old man like me. I'm a 53-year-old man-child. Here I go. Here's my messy desk. All right. I'm begging you all. Get an accountant. If you do taxes yourself, it's like doing surgery on yourself. Why? because the tax code changes all the time in every region of the country, the world, municipality, provincial, state, etc. Get somebody else to do your own taxes. You'll get more write-offs and you'll stay within the confines of the law. How do you find an accountant? Well, there's no Yelp for accountants, man. What you got to do is this. Talk to your rich uncle, aunt, successful friends, coworkers, and ask them, who's your accountant? Can you introduce me? That's it. And if you run your own company, I want you to get your accountant to file your personal taxes and business taxes as well. And if you don't run your own company, please start one. And let me help you start a side hustle, please. In the United States, 21% taxes for companies. So the government is basically telling you, please start a company. And I want you to as well. Because I don't want you, I'm going to swear here, please cover your ears, earmuffs. You don't want to spend the rest of your life being someone else's bitch. If you're frustrated at work, working for a schmuck, I say the following with love in my heart. Good. Because that should motivate you to start your own business. How do you start a business? Well, the easiest business for you guys to start on the side confidentially, okay, is a consulting business. Why? Well, in the United States, there's over 100,000 consulting businesses. The reason is because it's really easy to start. There's no inventory, nothing. You sell what you know. You package what you know. You sell it. You make 10 times more than you do working for that schmuck that's paying you this much money to make their dreams become a reality. Really, really easy. So when do you quit your full-time job to do your side hustle full-time? Well, you do it when your 6 months trailing revenue from your side hustle is greater than your annual salary. That's when you quit. Set up a call with me. Go to this link you see right here and let me help you start a side hustle so you can get paid what you're worth. Yeah. Okay. And I feel passionate about that because I've worked for schmucks in the past. Most people I work for are great. But I remember once I worked at Accenture, and I talked about this in my latest vlog, which is a 2-hour vlog I published yesterday. Too long. But I worked at Accenture. And I remember it was back in 1995, October. I was working on the merger of Manulife and Confederation Life in Toronto on Jarvis Street, dangerous street. Yeah. And I remember it was 10 p.m. one night. And the associate partner from the San Diego office, Tom, I'll never say his last name, but he said to me, hey, you, print out this database report. And I tried really, really hard. And it was really messy ODBC stuff, and I'm dating myself there. I didn't know how to do it. So I went up to him and I said, I'm so sorry, Tom. I tried to print it, but I just can't figure it out. And he looked at me and he said, it's because you're incompetent. And he walked away. I was like, WTF, why the face? It broke my heart. I was so mad. But I'm grateful that happened. I embraced that frustration so that I could start my own company and motivate you to start your own companies as well. Yeah. Otherwise, what happens is this. You know, I'll have like an annual party, have all my employees come over. I'm making this up, but it's funny. And, you know, I'll take my top sales guy and I'll go out to my badass Mercedes and I'll say, Brad, you see this Mercedes right here? Do you see this? Well, if you work really, really hard, then next year I will buy myself another one. That was bad humor. Okay. All right. All right. I thought SpaceX would be the first $1 trillion IPO. Yeah. Yeah, if SpaceX actually files the S1, then absolutely. I think they, in the private markets, value $800 billion right now. But the second, you know, the company's going to go public, the second they file their S1, you can always go to alerts.google.com and set up an alert on the words SpaceX IPO, and you'll get an email the second that this is filed, or SpaceX S1. Yeah. How do you see the role of content marketing evolving in today's landscape, especially for experts and business leaders like yourself? It's getting harder. It's getting harder. I find that you have to be as entertaining as you can be, as quickly as you can be. Otherwise, you lose eyeballs. And so the way, and you always want to look at how the younger generation, like your kids, consumes media. because that's what's coming next. And so the way I watch, my kids are older now. My youngest one, Dylan, he's 16, going on 40. You know how it is. The way I see them consuming media is, they're still using TikTok, YouTube Shorts, etc., Instagram Reels as well. They get bored really, really, really fast. And so you got to make your videos and your content like Mr. Beast, to the extent that people don't get bored. And what Mr. Beast actually does, he's very strategic. Alexa, stop. I got to wrap this up in a second. But what Mr. Beast does is, before he creates a video, he always designs the thumbnail and the title first. Yeah. And you got to edit the crap out of your videos as well. And I do all my video editing for my own longs. I love it. Let me show you here. So I'm going to go over here to go to my YouTube page. I published one yesterday. It took me forever to edit. I fucking love it, man. Sorry for swearing. So I published one yesterday you guys can check out, called How to Raise Money. And you have to, I'll wait for this ad to go by so I can finally get paid for it. Just kidding. But you got to edit the crap out of these things and have fun with it as well, right? So what I've started doing is I've started using more music in the background, more graphics, etc., and some comedy as well. You guys can watch this to learn more about that. And then what happens is I repurpose everything. So I actually have Jean Marco, my video editor from Canada. He's the best. What he'll do is every day he'll post shorts, and there'll be little clips of, and we do it every single day, right? Like, for example, this one, which got 415,000 views because she's gorgeous. Look at that. He used the same link same image twice. And so we'll repurpose these, and you don't get bored with these as well. And then here you got to have a call to action right here, CTA. And then this is for people to sign up for some of my stuff. Okay. All right. And I think I'm going to have to wrap this up in a second here. Okay. And I'm due for a haircut. I'm going to go see Dee Dee, who does my hair, in Burlingame. It's been a couple of cycles. I'm going to grow it a bit longer and just let it go curly, I think. Yeah. All right. All right, let me see if I can take one more question. I got to wrap this up here. Galore for sure wrote, I've heard before that Lebanese are some of the best business people in the world. I'm 25% Lebanese, so I'm 25% okay, I guess, at business. I don't know. But speaking of Lebanese, you got to use your network a lot, okay? And I don't care how you network with people, just find something in common with people. So this book here was given to me by a fellow Lebanese person named John Mack. So I networked to get a meeting with him as I'm part Lebanese years ago. So John Mack, he was the CEO of Morgan Stanley for years, great guy. And I used my Lebanese roots to get a meeting with him. And after I met with him in New York, like a day later when I got back to San Francisco, he FedExed his book to me with this really, really nice note. You guys can read it if you want to. Yeah. And you know who else is Lebanese? Is Nassim Nicholas Taleb, who's written lots of great books. Okay, great. All right, guys, I'm going to wrap up. I know there's tons more questions. If you guys want, you can ask me questions if you're a premium customer on my Zoom call, which is going to start in 2 minutes. It's a weekly 3-hour Zoom call. And my premium customers also get daily Zoom calls with me every single Monday, Tuesday, Wednesday, Thursday, Friday. That's 7 hours a week, 300 hours per year. If you want to join or talk to me about joining my program, see if it's suited for you, go to this link right here. Okay, guys, God bless you. I'm going to end this video like I always do with a very short 1-minute interview from Steve Jobs, I licensed from the Silicon Valley Historical Association, that will change your life. Thank you. God bless.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.